Consider the following summarized balance sheets of X Limited and Y Limited. Balance sheet is given as on 31st March 20X1. We are given equity share capital. Yes, figures are in thousands. We are given equity share capital, preference share capital, general reserve, export profit reserve, investment allowance reserve. Right, these reserves we will consider as statutory reserve. And then on the liability side further, we are having debentures, trade payables, and other current liabilities. Assets, we have land and building, plant and machinery, furniture and fittings, investments, inventory, trade receivables, cash, and bank. So pretty regular asset side is there. They are saying X Limited takes over Y Limited on 1st April 20X1. X Limited discharges the purchase consideration as below. It will issue 3,50,000 equity shares of rupees 10 each at par to the equity shareholders of Y Limited. It will also issue 15% preference shares. Okay, 15%. If you see the balance sheet, and balance sheet also preference shares are there, but the preference shares are of 14%. So the new preference shares that we are going to issue will carry a dividend rate of 15% to discharge the preference shareholders of Y Limited at 10% premium. Debentures of Y Limited will be converted into equivalent number of debentures of X Limited. The statutory reserves of Y Limited are to be maintained for 2 more years. So whatever debentures are there in the selling company, similar kind of debentures we will issue in the purchasing company. But do remember, what you are paying to the debenture holders, that does not become part of purchase consideration. Show the balance sheet of X Limited after amalgamation on the assumption that amalgamation is in the nature of merger, amalgamation is the nature of purchase. So we are supposed to prepare the balance sheet of X Limited. X Limited is none other than the purchasing company. So purchasing company's balance sheet is to be prepared assuming amalgamation is the nature of merger or amalgamation is the nature of purchase. Of course, certain things will remain common, and one of the workings that will remain common is purchase consideration. Whether the amalgamation is the nature of merger or it is in the nature of purchase doesn't matter. The purchase consideration is going to remain the same. So let's start with that. So we say determination of purchase consideration. Determination of purchase consideration. Let's work it out. Figures are in thousands. We say to equity shareholders use that information. One, we are going to issue 3,50,000 equity shares of rupees 10 each at par to the equity shareholders of Y Limited. Figures are in thousands over here. So I'll just remove this 3 triple zeros which they have given. So it is some 350 shares which we are going to issue of rupees 10 each. So I suggest over here 350 equity shares of X Limited at the rate rupees 10. So that's turning out to be 3,500. Next to preference shareholders. So we will settle the preference shareholders now. Just check information 2. Issue 15% preference shares of rupees 100 each. Okay. To discharge the preference shareholders of Y Limited at 10% premium. Okay. So check with the balance sheet. We realize that the preference shares are 1700. So we will satisfy this at 10% premium. Fine. So we put it accordingly. 1700 is there. We satisfy at 10% premium. So that is turning out to be 1870 divided by 100, right? The preference shares are of 100 rupees face value. So that is 18.7, 15% preference shares of X Limited at the rate rupees 100. So I get 1870. Total is 5370. So I'm ready with my purchase consideration. 5370 is the purchase consideration. Okay, remember this. Purchase consideration shall be the same. Purchase consideration shall be the same for amalgamation in the nature of purchase, for amalgamation in the nature of merger. Sorry, first they've given merger. In the nature of merger, as well as in the nature of purchase. Right? There will be no difference in the amount of the purchase consideration. Now, if the amalgamation is in the nature of merger, then a difference is to be adjusted with the results. So we say determination of difference to be adjusted, difference to be adjusted against results, in case of amalgamation in the nature of merger. Amalgamation in the nature of merger. Right, we had discussed this point theoretically in one of our earlier episodes. Purchase consideration will be compared with purchase consideration shall be compared with share capital of the selling company, and then we will work out the difference, and that difference has to be adjusted with the results. I'll show the working particulars. Amount Yes, start with the purchase consideration. So purchase consideration, it is 5370 less share capital of selling company, right, which is nothing but Y limited. So if you check with the balance sheet given in the question, share capital, here it is, 3000 and 1700. So that is 4700. So we will compare this with 4700. Share capital of selling company. Write in brackets if you wish, 3000 plus 1700. So it is 4700. The difference is 670. Right, we are getting 670. This will be debited to general reserve. Our first choice will be general reserve. So you are paying more than the share capital. If you are paying more, then the difference will be debited. If you were paying less, then we would have credited it. So it is debited to general reserve. If I again check with the balance sheet of balance sheets that are given to us, we do have general reserve. If you see the general reserve, here it is 250. We have to debit 670. But you have to also understand that the purchasing company also has general reserve of 500. So the total general reserve which is there is 750. See, this is amalgamation in the nature of merger. In amalgamation in the nature of merger, we will take over all the reserves, right? So what we can do is we can continue with this working itself. Now that you have calculated this as 670, okay, you can compare this with combined general reserve. You can compare this with combined general reserve, which is 500 plus 250. So I have 750. So total general reserve will be 750 and I will debit that by 670 of the general reserve. So I'll be left with general reserve of 80. So this is general reserve for balance sheet. When you prepare your final balance sheet, we will show general reserve of 80. If it is amalgamation in the nature of purchase, then goodwill or capital reserve is required. So working for the same, we say determination of goodwill or capital reserve for amalgamation in the nature of purchase. Amalgamation in the nature of purchase. Yes. Particulars. We prepare two amount columns this time. Our starting point is again purchase consideration. Purchase consideration 5370. And from this, we will deduct less net assets taken over. Net assets taken over. Yes, the net assets taken over, I'll refer the balance sheet this time. The net assets taken over. I will take over land and building, plant and machinery, furniture and fittings, investments, inventory, trade receivables, cash and bank. Every asset will be taken over. And in this question, they have not given us any other aggregate values. That means everything will be taken over at the book values. So there is no point in writing all these items. I may directly start with the total of the assets, which is 6,600. And from that, I will deduct the liabilities. Right, this debenture is a liability, trade payable is a liability, other current liabilities. So these figures shall be deducted. That will give me the net assets taken over. So I'll put the net assets taken over. I'll say here sundry assets, right? Straight away from the balance sheet, I take a total 6,600 less 13% debentures. I'm copying from the question now. I have a copy of the question. I'm writing from there. 350 trade payables, that is also 350. Other current liabilities. Other current liabilities is 150. So 6,600 minus 850, isn't it? So the net assets taken over is 5750. So we are paying 5370. See, you are paying 5370 and in return you are getting 5750, right? Items worth 5750. That means you are benefited this time. So this difference of 380, it is capital reserve. When you prepare the balance sheet, you will have to show this new reserve, capital reserve, in your balance sheet. So it is now time to prepare the final balance sheet, right? So it's a balance sheet of X Limited, and we have done the takeover on 1st April. So we will show it accordingly. Balance sheet of X Limited as on 1st April 20x1. Say particulars, note number, and then we say in the nature of, and I'll prepare a columnar balance sheet in the nature of merger purchase. So this is going to be the format of the balance sheet that we are going to prepare. Yes, let's start with it. Say equity and liabilities. Under that, our first head is shareholders funds. Again, under that, we say A, share capital. Under that, we say B, reserves and surplus. We don't have any of the figures right now. We will get it from the notes. So we say note 1 and 2. Our second head is non-current liabilities. Under that, we say long-term borrowings. It's our note 3. Our third head is current liabilities, right? Under that, we say trade payables and then others. We will get this from the balance sheet itself, the one which is there in the question. Okay. See, the trade payables, we will do line by line addition. Other current liabilities, we will do line by line addition. Actually, in purchase method, you can change the values, but they have not given us any other values. So I will just do line by line addition and present it in my balance sheet. And it will be the same, whether it is amalgamation in the nature of merger or amalgamation in the nature of purchase. So trade payables, I get as 800 for both, and others, I get that as 350. Okay. We leave a line blank for the total. It's time for the assets now. Assets. Under that, the first head, non-current assets. Under that, I say property, plant, and equipment. I will need a note for it. So I'll say note 4. Then I'll say 2, current assets. Current assets. I'll show here inventories, trade receivables, cash and bank. Yeah, there was one item that we missed out. Investments. Sorry, we just missed out the investments. So we have investments over here. We will do a line by line addition of the investments. So we get 1200. Right, investment of purchasing company and investment of selling company are added. Similar line by line addition we will do also for the inventories. So just add up the two figures which are there in the balance sheet. 2200, 1930 over here, and 1245 over here. Once again, the total. Yes, we say now see notes. So 4 notes are required, isn't it? Let's prepare the notes. Certain notes will be common for amalgamation in the nature of merger as well as purchase, while certain notes may be exclusive for one type of the amalgamation. Our first note is for share capital. So let's show the note for share capital. In share capital, we have equity share capital. So I first show that I say equity share capital. Fine. Let's return back to the balance sheet and understand the note to be prepared. See, if you see the share capital, equity share capital of the purchasing company, it is 5,000 and shares are of 10 rupees each. So I remove this last zero, I'm dividing it by 10. That means in number 500 shares are there. Okay, 500 shares. And then if you check with the purchase consideration calculation that we have done, in purchase consideration calculation, you will realize that we have issued another 350. So 500 plus 350, now total 850 shares are there. Fine. So remember, for equity shares, 850 shares are there. Okay. Now we'll look at the preference share capital. If you see the preference share capital of the purchasing company, it is 2200, but preference shares are of 100 rupees. So I will remove these two zeros. So 22 shares are there, and this will be at 14%, right? It's at 14%. And if you see the calculation of the purchase consideration, you will realize that we have issued another 18.7, but these shares are of 15%. So it is all these items that need to be disclosed over here as a part of note 1. So under equity share capital, we will say 500 plus 350. All the figures are in thousands. That is 850 equity shares at the rate rupees 10. So it is 8500 for both merger as well as purchase. Next, preference share capital. Okay, preference share capital 22, 14% preference shares at the rate rupees 100. . 2200. 18.7, comma, 15% preference shares at the rate rupees 100. 1870. That's it. Take a total. 12,570 is the total. So we go to the balance sheet, right? We go for the balance sheet, and in the balance sheet, we put the share capital figure now. 12,570. Here also 12,570. Our second note will be relating to reserves and surplus. So note number 2, reserves and surplus. Great. Yes, we had done this calculation. We are coming across a new reserve, which is capital reserve. So I will first report capital reserve. This is there for the amalgamation in the nature of purchase. Okay, so put a blank here and we say 380. Then we report general reserve. We have already done one working. The general reserve that we can show is 80, right? In case if you have forgotten it, I'll just show you again as a part of the working. Amalgamation in the nature of merger, we have calculated general reserve for balance sheet. Here it is. General reserve for balance sheet. We are showing 80. So I'm showing that. Okay. As far as the purchase method is considered, we cannot take over the general reserve of the selling company. So we will show only our general reserve, which is 500. So we report that general reserve as a part of our note. So in purchase method, we will show only our general reserve of the purchasing company, which is 500. Then we have export profit reserve. Okay, export profit reserve, which is turning out to be 500. This is a statutory reserve. So in purchase method also, it will be taken over. Investment allowance reserve. This is also a statutory reserve, so it will be taken over even under the purchase method. But in purchase method, the accounting entry for statutory reserve is amalgamation adjustment reserve account debit to statutory reserve, and then amalgamation adjustment reserve should be shown as a negative reserve. So I say here amalgamation adjustment reserve. Amalgamation adjustment reserve. Okay. Here you will show only for the selling company, right? Export profit reserve and investment allowance reserve. We will show it as a negative reserve, 300. Then we have profit and loss account. In nature of merger, all the reserves of selling company will be taken over. So add up the two reserves. I get 1250. But in purchase method, I will show only purchasing company's P&L. We cannot take over the selling company's P&L. Let's take a total over here. 80, 500, 100, and 1250. We get 1930, 380, 1000, 100 minus 300 plus 750. It's a coincidence that we are getting the same figure, 1930. So I have my reserves and surplus, 1930. I'll return back to the balance sheet. And against note 2, I put 1930. Right. This is the note for the reserves and surplus. In case if you are still writing, you can pause the video here and you can go through the working. My third note is relating to long-term borrowings. Long-term borrowings. I shall be showing debentures over here, right? I'll say here 13% debentures. They are saying that the debentures of selling company will get converted into equivalent number of debentures of the purchasing company. So you have to simply do line by line addition of the debentures. It will turn out to be 850 each. So that's the debentures, 850. So as I prepare this balance sheet, I'll show debentures here, 850. You can even avoid preparing a note if you wish. Okay, so I do have the figures necessary to take a total. So 12,570, 1930, 850, 800, and 350. Our balance sheet total is turning out to be 16,500, right? So I get 16,500. However, I'm still left with one note relating to property, plant, and equipment. Okay. Yes, you can continue after the third note. I will prepare the note over here because I need the figures. So I'll just show it here. My fourth note is for property, plant, and equipment. Yes. I'll show here land and building. Plant and machinery. Furniture and fittings. We have to simply do line by line addition. Okay, just keep on adding these figures. They have not given us any separate figures. So whether it is purchase or whether it is merger, it will all be the same. So 2500 plus 1150, I get 4050 for both of them, right? 4050. Plant and machinery, add up, do line by line addition. 4950, 4950. Furniture and fittings, line by line addition. 925, 925. Take a total, 9925. That is the total, 9925. So return back to the balance sheet that you were preparing. Property, plant, and equipment. I introduce over here 9925. Here also 9925. And take a total. 9925 plus 1200 plus 2200 plus 1930 plus 1245. That's it. I get 16,500. Isn't it? Yes, I take you once again back to this working. In case if you are still preparing this note, just pause the video here and complete it. And then, of course, the final balance sheet. Here it is, the balance sheet. This is the liability, equity and liabilities. In case if anything is left for you to write, pause the video here for equity and liabilities. And in case if something is left to be written for the assets, then you can pause the video here. These are your assets.